The market just got slammed. The Dow's red, the Nasdaq's bleeding, and your portfolio probably took a hit today. But here's the thing. This isn't a reason to panic. This might actually be the best opportunity we've had in months to buy quality stocks at a discount before the next leg higher. This is not financial advice. If you appreciate fast, clear market breakdowns like this, hit that like button and subscribe. It really helps more than you think. So here's what happened. President Trump came out swinging this morning, threatening a massive increase in tariffs on China. He said he's fed up with China's export restrictions and ready to impose huge new trade penalties to level the playing field. And just like that, traders everywhere hit the panic button. Within hours, the Dow, S&P 500, and Nasdaq all turned sharply lower. Tech stocks, which are most exposed to China's supply chain, took the hardest hit. Semiconductors, Apple, Nvidia, Tesla, you name it. The sell-off spread fast, wiping hundreds of billions off the market cap of some of the world's biggest companies. But take a breath. Because while the headlines sound scary, this is not a long-term crisis. It's a short-term shock. And those are the moments that create real wealth if you understand what's going on underneath the surface. Here's the reality. China recently tightened exports on key rare earth materials, the metals that power everything from AI chips to electric vehicles. In response, Trump threatened to ramp up tariffs on China's imports to put pressure back on Beijing. The result? Market fear. And whenever uncertainty spikes, prices drop fast, even when fundamentals haven't changed one bit. That's exactly what's happening here. Nothing about the AI boom has changed. Cloud computing, EV demand, enterprise software, none of those growth trends are slowing down because of one trade headline. But traders don't care about that in the moment. They care about risk. When risk goes up, they sell first and ask questions later. This kind of knee-jerk reaction is exactly how smart investors get great entry points. It's not because the economy suddenly got worse. It's because people hate uncertainty. It's an emotional reaction, not a rational one. And that's where opportunities come from. So let's make sense of why stocks fell so fast today. First, uncertainty kills confidence. No one knows if tariffs will actually happen, when they'll happen, or how severe they'll be. Second, analysts start cutting earnings forecasts just to be safe. That adds pressure to valuations. Third, big funds begin rotating money out of expensive tech and into safer sectors like energy or healthcare. The result is a short-term flush in high-growth names. But guess what? We've seen this movie before. We saw it during the 2018 trade war, we saw it during the 2020 COVID crash, and we saw it during the 2022 inflation panic. Each time the market overreacted and then recovered even stronger. When you zoom out, these moments barely register as blips on the long-term chart. And if you had the patience to buy during those dips, you didn't just make money, you crushed the average investor who sold in fear. That's why I see today's panic as a short-term event, not a long-term problem. The fundamentals of the biggest growth sectors are intact. The AI revolution isn't slowing. Corporate earnings are still growing. And interest rate cuts are likely coming next year, which is historically bullish for equities. Here's how I'm thinking about this as an investor. When the market drops because of fear, I look for companies with strong balance sheets, durable business models, and low exposure to China. If the market gives me a 5% or 10% discount on world-class stocks, I'm not panicking. I'm scaling in. I'm talking about companies like Microsoft, Google, Broadcom, and AMD. Names that aren't just reacting to the AI wave, they're building it. I don't go all in at once. I ladder in slowly, building my position over time. So if prices drop more, I can average down and lower my cost basis. That's how long-term investors win. And it's not just about the US tech giants. This sell-off can also create great setups in beaten-down sectors like semiconductors, cloud infrastructure, and robotics. These areas move fast when sentiment flips back to positive. Remember, the stock market moves on emotion in the short term, but follows fundamentals in the long term. Right now, the emotion is fear. But the fundamentals, AI, data centers, energy transition, automation, are all stronger than ever. That's why I see this as a temporary storm in a long-term bull market. The next few weeks will be all about watching how this trade story develops. If Trump cools down his rhetoric, if China signals any kind of willingness to talk, or if earnings reports come in solid, the market will recover fast. That's usually how it happens. The sell-offs are sharp, but the rebounds are faster. So instead of worrying about every red candle on your screen, zoom out and ask yourself, did the long-term story change? For most quality companies, the answer is no. In fact, this kind of shakeout often clears weak hands out of the market and resets valuations, making the next rally even stronger. We've seen it time and time again. Fear creates discounts, and disciplined investors buy those discounts while everyone else runs for the exit. You don't need to predict the exact bottom. You just need to recognize when the market is offering good businesses at great prices. Trump's threat may dominate headlines for a few days, maybe even a few weeks. But it's not going to derail the biggest technological revolution of our lifetime. AI infrastructure is still scaling. Cloud data centers are still expanding. EVs, clean energy, and chip design are all accelerating globally. That's the bigger picture. Short-term fear always feels louder than long-term opportunity, but history rewards the people who can tell the difference. So while the headlines scream panic, I see possibility. While others are selling into fear, I'm looking to accumulate quality names. And while everyone's waiting for certainty, I know that certainty never comes until prices are already higher. If you found this breakdown helpful, make sure to hit that like button and subscribe for more fast, no-nonsense market updates just like this. I'll be covering exactly which stocks I'm watching for re-entry as the market finds its footing and how to position for what comes next. Until then, stay calm, stay strategic, and remember, volatility is opportunity in disguise. This is the time to think long-term, not emotional. The best investors don't panic when prices fall. They prepare for when they rise. Thanks for watching, and I'll see you in the next one.